Hello and welcome to Faraday Europa II, our new venture capital fund diversified vehicle to invest in startups, entrepreneurship and innovation across Europe. We wanted to make this little video to summarize the deck that we've shared with you and to make it a bit more fun and agile for you to understand what our value proposition is. As you'll see, first of all, we want to explain to you our track record, our history. We were born in 2011 in Spain as a private investors club, pioneering in Spain a model where our investors could choose deal by deal the companies they wanted to invest, to co-invest with us. With this model, we've been able to invest in over 40 companies and have experienced 6 exits and provide very interesting returns to our investors. Also, in 2020, we launched our first diversified venture capital fund, Faraday Europa I, which reached 36 million euros in assets under management and got the support of Fondico Global, which is the main Spanish fund of funds, covering half of its volume and declaring our fund as one of the best early-stage venture capital funds in Spain. As you will see, Faraday Europa II incorporates new members of its investment committee, in particular in the persons of Lupina and Yaiza, which are two very successful entrepreneurs here in Spain, which have proved amazing execution skills and who are going to help us to amplify our reach to detect the best opportunities, but most importantly, to be able to help the companies of our portfolio not only in growing as much as possible, but also in the most difficult times. And Ana and Maria, which are two very reputed ESG professionals, which have been able to implement the best environmental, social and governance practices in private equity venture capital funds in Spain as a pioneering professional in this sector. Finally, there's Isaac Benzaken, who is repeating as president of the investment committee, also a president from Faraday Europa I and one of our major shareholders and investors in both funds. Aside from the investment committee, we also count with a cohesive and committed team of professionals in the areas of legal, accounting, financial officer and accounting manager, and communications, with whom we try to provide the best possible service for our investors, not only on the return and financial side, but also on many other activities that we will explain during this deck. Regarding our investment philosophy, so we call it sector and technology agnostic. Basically, we try to intelligently diversify and gain access to various technologies or consumer trends in various sectors and various geographies to try to have an ample exposure to sectors and technologies that could well be disrupted by the companies that we invest from our portfolio, and different tendencies and different technologies. We always invest in an early commercial stage. Basically, we need 4-6 months at least of sales to be able to analyze customer acquisition cost, margins, independency of channels of acquisitions, recurrency, all these type of metrics that only appear when there's some initial sales happening, and which allows us to eliminate or mitigate at least important market execution team risks, while at the same time maintaining a moderate valuation. Typically, we invest first tickets at less than 4 or 5 million euro valuation, company valuation. Third, we focus on companies that are proving excellent execution skills by their founders, but that also show a deep commitment from these founding teams, as well as alignment among all stakeholders within their cap tables and the type of measures we include in the shareholders' agreements to make sure or to try to align as best all interests from all stakeholders as possible. As you know, there's been some macroeconomic factors which have impacted the industry, the private capital investment industry, basically the ramp up in inflation that we perceive from 2022 onwards, and the increased interest rates affected the valuation of technology companies, and particularly privately held companies, which entails also for us a very interesting environment where investors in the venture capital industry, specialized in particular in the early stage, have much better conditions and a much more favorable environment than what we used to live in 2019 or early 2022, which affects the valuations at which we are able to enter the companies. Not only enter, but obviously invest in follow-on rounds in the short terms. We believe this is going to have a positive impact in the returns we can provide to our investors, because at the end of the day, within the investment period of Faraday Europa I, we will probably be able to profit from this situation, whereas the divestment period in 5-7 years' time, we hope to be able to choose when to sell the best performing companies of our portfolio, and therefore not only take advantage of the difference in price due to the value creation, but also thanks to the environment today of low valuations. This is happening at a moment where we have a huge development of the ecosystem in the last 10 years, in Europe in particular, with a lot of incubators, accelerators, business angel forums, and a lot of education among best universities to provide the best tools for many and many more aspiring entrepreneurs to disrupt their own sectors. So we believe we are the best cross point among an ample choice between high potential startup and a low valuation environment for specialist investors. Why us? Why Faraday? So, as you know, most venture capital firms try to provide some extra value to their investees, to their portfolio companies, than just plain money. So we try ourselves to be the best companion a startup in Europe, Occidental Europe, could have for their growth and development. We will detail in our deck some of our advantages, like for example the access not only to deal flow and to very interesting startups thanks to the 12-year trajectory we have and the brand we've built over those years, but also due to the relations that we've built over those years, and to be able to access quickly not only entrepreneurial hubs, but also potential clients for each of our portfolio companies, in particular in Spain, but also already in Belgium, Germany, and other countries. You will also see in a very summarized fashion the type of programs of incentives that we provide to our portfolio companies, basically to empower them commercially, to try to help them open new business, to internationalize, and we try to leverage in an intelligent fashion the contact networks, professional and personal contact networks of our club partners, the over 250 investors we have that invest through the Deal by Deal Club. Also, more and more limited partners from the first fund, and we hope many limited partners from our second fund will join forces and help our startups thrive throughout Europe. Most importantly, we are also experienced investors in high risk small companies, and we've lived over these years, many difficult, delicate situations with personal problems arriving. We're all humans, and with that in mind, we've always approached this type of problems with a lot of humanity, trying to solve this type of conflicts and relationships, and we are able to provide a lot of calmness and ways out of the box to realign all of this interest, and possibly that's the less structured part and one of the most important to try to help our portfolio companies, humanity. On the execution side, now we want to, again, in a summary fashion, we want to talk about how we analyze companies and how we take decisions. As you will see, we have been perfecting the ways we filter to be able to cover an ample spectrum of potential investments, over 3,000 companies per year, and to deepen the analysis on the companies that fit the best our criteria throughout these 12 years of developing Faraday. Also now we count with this investment committee better and with more angles observed in this investment committee of Faraday Europa II, and we're trying to explain to you a bit our decision taking. For first entries we need a majority and also the positive vote of the Chief Investment Officer, and for second investments over €1 million in a portfolio company, we need reinforced majorities among the investment committee, 75%. We're also going to talk about the capital allocation strategy. As you will see, there's 5 years of investment period, 4 years of divestment period. During these 5 years of investment period, we're going to be investing these €40 million in around 25 to 30 companies in 3 typologies of ticket. The first entry, when we discover a new startup we want to join forces, the average ticket will be around €250,000, and we will build a portfolio, compose a portfolio of 25 at least companies over the first 3 years of the investment period. Afterwards, we are going to be invested in around half of those companies' tickets, we call them intermediate, of around €750,000 in the best performing companies, half of the initial 25 invested. And finally, towards the end of this 5-year investment period, we will be making our biggest bets with around average €2 million tickets in the best 5-6 startups of the portfolio. So during these 5 years, investors will be disbursing their commitments at around 20% of the total commitment per year, and as soon as the divestment period initiates on year 6, they will be receiving the reimbursements according to the sales exits of the portfolio companies invested. Also, as we were mentioning in our team part, you will be able to enjoy a high level of service, because it's not just about investment, it's also the experience, and you'll be able to have access to the extranet, where you will have all of your positions, both through the fund and both in direct on a personal way. Any invoices, you will be able to access the quarterly reporting in detail of any portfolio company that you may have a particular interest in, together with more detailed even information about their shareholders agreements, cap tables, etc., etc. But you will also be able to enjoy a very summarized report quarterly in your email, of course, if you don't have a lot of time. You also have a mobile app, and most importantly, you have many activities, in particular the networking quarterly events, where you'll be able to meet investors like you from Faraday, but also the founders of our portfolio companies. Every quarterly event is accompanied by a private dinner between investors and portfolio company founders. You also have access to more fun activities, our summer event, or Christmas dinners, more training, more formative activities like our annual workshops on investment analysis, but that's to your choice. You will choose which of the activities you would like to enjoy with us. Last but not least, there's the economic terms to join our fund, Faraday Europa II. You will see the €40 million objective, but one of the innovations, it is the first Spanish fund that venture capital fund, that you are able to access with a minimum €25,000 commitment, which is disbursed in 5 years as well. I believe this is the first venture capital fund in Spain with a requirement of less than 100,000, and it's totally aligned with our mission to generate vocations of business agents and to try to diffuse the venture capital as an asset class in our country and in Europe. Our objective internal rate of return for this 9-year fund, 5 plus 4, is of 25, and to surpass ideally 25% IRR. And we are covering from the investment managed company 2% of the total volume of the fund, whatever it is. And also our main shareholders of Faraday, we are covering 1.2 million on an individual basis, making up for 5% of the total fund, at least covered by the shareholders and the investment management company. So I invite you to read a bit the deck that we've shared with you, and if you're interested, please send us an email, and we would be very glad to have a little coffee, virtual maybe coffee with you, and to discuss about entrepreneurship, innovation, and investing in venture capital. Thank you very much.